All right, so that's all the housekeeping. Let's get into the topic today. You should be able to tell by the title of the YouTube, how to trade a bear market, right? Well, it shouldn't be a surprise by now because we are months and months into this downtrend on the broader market. The S&P, the Dow, the Nasdaq, everything's in a downtrend. So whether you want to call it a bear market or not, that's fine. That's just semantics. I don't really care what you want to call it, but you have to know how to trade it. And so there's a few things that I think need to be explicitly put out there so people can, try to stay safe. That's really, when I create content, I'm always doing so with this forethought of how to keep traders safe. Um, so, what are my tactics that I use to personally trade these types of markets? Because I do trade them, right? And so you have to understand, everybody should be able to pinpoint what it is that they do. Like I said earlier, this is a business, right? So what's your business model? Are you a day trader? Are you a swing trader? Are you an investor? Are you primarily long bias? Are you primarily short bias? You need to know the answers to these questions because they matter. They matter, they matter, they matter. Okay? So, yes, I trade, but I also have long term investments I manage as well. And guess what? When we go into a bear market like we're in right now, I don't trade those things the same way. So, the first thing I wrote down is if you can only go long, then you need to make sure that you're looking for sectors where they still have an uptrend intact and you see money rotating into those sectors. I.e., right now, the two that come to mind, guys, that everybody should know is energy and oil, right? So if you can only go long, you might want to be looking to put your money to work in those sectors because the trend is still your friend. You don't want to be fighting the path of least resistance, right? The other way to go long is to look for situations where things get oversold. Now, that can be very subjective, and not everybody will have the same definition of what oversold really means. But for this instance here where we're doing the Sunday prep, I can only speak from my personal experience in the way I trade, right? These are my opinions. Okay? So for me personally, for something to be looked at as oversold and where I may be willing to go long something because we may get a bounce play in the near term, I need to see extension, meaningful extension away from the daily 20 SMA. That's how I do it. It's not a secret. I'm not trying to keep it a secret. I mean, most people will tell you I'm an open book, guys. I'm not out here trying to keep secrets from anybody. I'm actually trying to be as transparent as possible and help you guys. So if I see something that gets extremely extended away from the 20 SMA on the daily time frame, that to me means that it's moving into a level. We did a whole webinar on balance and imbalance. So a stock, even if we're in a bear market and things are going down, they're going to find levels of imbalance and need to resolute back to levels of balance. And so those do actually provide long opportunities. And as you've seen since this bear market started, we've had some face ripping rallies, which by now I'm sure you've heard this term probably overused, and that's the bear market face rip and rally, right? You hear it all day on Twitter, people talk about it, so it shouldn't be a surprise. And you can see it on the chart when you look at the daily chart of whether you use SPY or the ES or the QQQs or the NQ. We've had some big rallies, but those came from levels of being oversold. Those came from when we moved into areas of imbalance, extreme imbalance, and needed to have a resolution back towards the mean, back towards the trend, because things don't just go straight down. They have to move lower via lower highs and lower lows. And keep that in mind too, because that basic concept of stocks needing to move via a trend, that transcends every time frame and every era of the stock market, whether you're talking way back in the Great Depression all the way up through the dot-com era, the great financial crisis, and even into today, right? Stocks don't just go straight down. They have to do it via lower highs and lower lows, and they don't just go straight up. They have to do it via higher highs and higher lows. And that means there is going to be plays on both sides. So what's another thing I do when we go into these bear markets? Well, a lot of people I work with and talk to, they kind of got their start during COVID, right? 2020, maybe 2021. Well, and even if, you can make an argument that even if you started well before then, we've been in a 13-year bull market. You literally could buy the dip for the last decade or longer. And if you were wrong on your timing, the market was in a situation where you would get bailed out. So whether you just added to losers or whatever, typically got bailed out and reinforced a lot of bad behavior. Well, guess what? That market is gone. You really, really need to zone in on risk management, understanding when to take your shots, understanding that this is the time to have extreme discipline. You cannot do the whole hope and pray type thing in this market, because you're not guaranteed the market's going to bring your stock back up to your level or your entries, and you could actually get demolished. I mean, it's happened time and time again. It's not the same market we were in 8 months ago where you could just keep buying the dip. Now, remember the bull market. It was, it was classic to see these guys for 13 years trying to call a top on a bull market, and they just got ran over. I was able to short stocks in that bull market, but I had to be very disciplined. I couldn't just short and add. I had to stick to my stops. I had to stick to my risk. And now it's the exact same thing, but on the other side. If you're trying to get long, you got to pick your spots, and you got to be very, very disciplined on your risk management. You must stop out when you're wrong, guys. This isn't about trying to be right all the time. It's about just trying to be right until the market tells you you're wrong, and then acknowledging it and moving on. And that's just part of what we do for a living. All right. So the fourth thing I wanted to touch on is go ahead and learn to short. Now, I know the first things we were talking about there were just if you're just a long only trader, but there's nothing wrong with learning new tricks. How do you learn to short? Well, for people that have conditioned their mind to only see long trades, give this a shot. Invert your charts. Whether you're on Thinkorswim or TradingView or TC2000 or whatever you use for charting, I guarantee you there's a button or a way you can manipulate the chart to flip it upside down. And it would probably blow your mind if you've never done this to do so in this market. And the second you do, and you start looking at chart after chart, as long as you're not looking at the oil or energy charts, you can look at chart after chart after chart, and you'll be like, damn, these look like some very bullish setups. What's that mean? Well, you're saying it looks extremely bullish, but the chart's upside down. So what you're really saying is these charts look great if we were going short, and it's no different at all. And again, it's not for everybody, but if you feel like you need to be involved in the markets and you can't stand to sit off to the sidelines and be patient, then there's nothing wrong with trying to learn how to short. It's not evil. I promise you, you're not going to burn in hell if you short stocks. It's just an idea, guys. But again, same concepts apply as everything else is risk management, right? Stay disciplined. And the last thing is, if you really, really just feel like you can't learn to short, you only can go long, and you are more of a long-term trader, then sit on the sidelines. Cash is a position, sit on your hands, be patient, and wait for the next bull market to return. There's no telling how long that'll be. It drives me nuts that we're 5 to 6 months into a bear market, and all I hear people saying is, hey, Ricky, where do you see this bottoming? Where do you think the bottom is? The answer is, I don't know, and I don't care. I don't have to know. Same way I didn't need to know where the top of the bull market was, because just like we talked about minutes ago, right? The only way for the stock market to go higher is to make higher highs and higher lows. It's not doing that, so we ain't got no end in sight. As long as we're making lower highs and lower lows, we're going lower. Now, does that end today? Does that end next month? Does that end next year? I don't know. But the chart is going to tell you. And one of the hardest things to do in trading is knowing the difference between when to hit buttons and when to be patient and sit on your hands. So again, that really does kind of go full circle back to the first thing I was saying, and that is being able to identify what kind of trader you are, what kind of market participant you are. Not everybody is a day trader. Not everybody's an investor. But don't look at what other people are doing and feel like you need to be doing that. Because guess what? There's people making a killing in this market. There's also people that are getting killed in this market. But you can't look at somebody that's crushing this market and feel like you need to do what that person's doing, because that person might not trade the same type of markets as you, might not have the same strategy, doesn't have the same business plan. So make sure you know what it is that you do. What are your core strengths? What are your core weaknesses? How do your strengths play into the current market, or maybe they don't, right? You have to identify these things, because until this bear market ends, the path of least resistance is going to be down. And if you're a long only trader, you got to recognize that. So that's my tips to you guys on how to try to stay safe during this, and possibly even profit off it, right? So, again, here in a second, I'm gonna start doing the actual ideas for the week, and I'm gonna have a lot of ways I'm gonna try to extract money from the market this week. But that's because I know how I trade, I know where my edge is, and I know what kind of market we're in, and I'm not, the worst thing you could do right now is be stubborn and not willing to admit that the downtrend is the path of least resistance. All right, so let's do the disclaimer real quick, and then we'll get